What is up, guys? Welcome to Trading with OC. You got me a little bit off guard there. I was reading JR OC. I don't know who told you your face wasn't okay to use in its nerd joke, but we should vote on Piper Academy and hear if everyone thinks using real face. Yeah, absolutely. I mean, just try to make it automated. I know it's not the best AI avatar at all. Every single picture changes to me, but I'm working on it, and I'm gonna be kind of like a try to automate the setup in there. Username in the house. Hey, username, give me the heads up, give me the thumbs up if you are in here, because I have a secret for you, my friend. Hey, also stick around. Let's get started with you guys. Today, no countdown. Today is gonna be a fast class. We're just gonna going over what we learned yesterday, and of course, what we didn't, which is just the EMAs, just how they work basically, and also what are the slight differences in practicing throughout the classes. But guess what? We nailed basically the areas that we were talking about yesterday for Beacon to reach. All right, so I see Alexander G, Mud Queen in the house. Welcome, JR. Welcome, my friend. Username OC. Viva la revolución. Viva la revolución, my friend. Boom, triple cream dam. Good evening, OC. Good evening, my friend. Username but it's short. By the way, guys, OC was username. Yes, it was me, man. I just need to make it a little bit fun. So username was me. That is kind of like I appreciate you, buddy. So I just wanted to make you that little joke. Like I said, remember that I sent what was Alex the little bread where he can put his money because he's Italian. So kind of like that joke. It's innocent one. Username needs more beard, lol. But well, I don't know. Maybe I can do that, Nemesis. Now that you know your Nemesis identity, well then we can play. You can be part of the joke build-up. So maybe we can take sides, and maybe we can. I don't know. Maybe we can do something with. Give me ideas. Maybe we can mess up with people there. JR, you are in the joke too, my friend. So let me know. I think it was a little, what was it? I love your happy, cute little Mexican. Oh, love it, my friend. That is amazing. Thanks. Love it. Really love you are. Yes, I'm user meme. So I even tried to copy his username's profile picture, and I actually did, just Google like very fast. That's what Piper was calling me out, like, hey, what do you think about this and that and so on and so forth. I was like, what? I was just too concentrated messing around with people in there. Trade Division in the house. What's up, Trade Division? Nice to have you around. By the way, special shout out to Trade Division. That was an amazing tutorial he sent me. So quick question, guys. Is my mic volume better than yesterday? Let me know, because it turned out that it wasn't 37, 30 something. And like Trade Tuition told me, hey, dude, I think your mic is misconfigured on the Windows side. Just do this really quick. And he sent me pictures. I did it like within 10 seconds. And guess what? He nailed it. It wasn't 37. I thought it was like it's a common bug or something. I don't know. He just had that ear, man. You should be a musician. Does Piper know? Piper doesn't know. Not just yet. So before he joins the class, don't tell him. Epic for sure. All right. Thank you, guys. Thank you so much. I know who to tease with, right? I mean, boil ribs. What else? Oh, yeah, JR, totally paper background, backwards, right? So pass me over. Yeah, user meme. That was me, bro. So pass me over jokes, and I push them in as user meme. So maybe we can do we can make everybody hate love relationship with user meme. What do you guys think? Maybe we can get Piper, like a surprise. That'll be amazing. Sounds amazing. Thank you, my friend. All right. Doesn't OC, he doesn't. We can have a lot of fun with this. Oh yeah, bro. I think we can absolutely do it. All right. Wick's wife, what is up? Welcome to the show. let's get it, guys, because today I have an appointment right after this, and then also I need to go buy some materials for my house remodeling. Things got like out of control. So let's get it. Also, there's not much to look at today, but I want to go over some important points. Let's get into the charts and keep that as a secret, guys. User meme. I'm watching you guys. Let's go check out the charts. All right. Just a quick overview. If you guys are new here and you're just stumbling this channel, let's remember that this is from 0 to hero, right? Setup. Full disclosure, I work with Chart Prime, and the indicators that I use are fully Chart Prime. That's why not only I start using Chart Prime indicators before I work with them, and I trust them, and I do my own trading with my own money, and you can check that out on the Chart Prime classes, live classes. I also came to be part of the debugging team with Chart Prime indicators, right? So they create indicators, they give it to us to test it out, we try to break them, and then we send them back, right? So that's kind of the thing. So many of these indicators, they have not only my seal of approval, but also I love how they work, right? So that's why, because I do have in-depth knowledge on how the Chart Prime indicators work, I'm gonna be showing you both paid versions and free version, so you can follow along however you're doing. The point in here is for you to have kind of like an mentor, right? An opportunity to have a one-to-one conversation to somebody that is actively trading, right? That is profitable, that it shows its trades throughout the classes every single day, that you can go and ask questions, something that I will love to have back in the day when I was starting, and I did not understand many things that I now do, right? And I needed to either blow off accounts by learning those lessons, or just go ahead and pay for education that didn't actually usually answer me straightforward the questions that I had, right? So that's why we're going and we are repeating the chapters, just so you know. Again, if you're new, if you're not up to date with what's going on, you'll see that I believe that was chapter 3 or 4, don't quite remember. We talked about EMAs and SMAs. And now that we have the basic information, we are on the part of advanced trading, and we're not only discussing how it works in detail, but also different things that we can abstract from these EMAs or SMAs and then start using them. This last class, and I advise you to watch it, because I think that was one of the most dedicated or most fluent classes I believe that we have had. It's full pack of things, right? Things that explain you how to use the indicators, how to extract one way some information, how to extract the another way information, and the point is that you connect. So shout out to Harp. I don't know if you already here, my friend, but if you're watching the review, I want to shout you out, because I did have a chance to read your comment that says that last class connected with you. I'm really happy. Hopefully we can do a little bit more of those classes that connect with you, not only with you, with everybody else in the space, because, you know, I'm trying to teach you how I wanted somebody else to teach me. All right, let's cut the talk and let's go into the action. Yesterday we were talking about a possible change in here. Why? This is one of our free indicators. It is a linear regression oscillator. It is one of the oscillators that I said, man, this oscillator should be premium, should be paid for indicator, but it's free. And I would say take advantage of that. Not only that, remember that we added in above or within our linear regression oscillator, we added the ADX out of the DMI, ADX, and key levels, right? That way we can see we are abstracting trend movement, trend strength, and also the trend or the strength of that movement, right? Basically, when you're white lining here, this one that I'm shaking, this is the ADX, all right? When your ADX, it's pointing up, that means strength. It doesn't matter if you're bearish or bullish, that means strength on whatever you are, all right? So for example, up in green, strength on the bullishness. Up in blue, going down, strength, because it's up, right, on the bearishness, right? We also have what I have named them myself, right? So this is not the official name, but I call them peak performance, because that is basically when we are at the top of the full potential, and then we are just slightly losing that potential, and then we trigger one of those signals that tells you know what, this is the peak performance that we have had, right? So it's not especially peak performance, but I think that's a cool nickname that describes almost precisely what's going on behind the scene in there. And then we also have these kind of diamonds, which are going through or reversal diamonds. They are not reversals on the trend, but it is telling us the exact point that we're going through the zero line, basically switching from bearish to bullish. All right. So now that we understand this, and this is going to come important in the next explanation, it is look at that we were bearish throughout time. And remember what I started with, I believe either yesterday or the day before, chapter 14.2 or 3, or chapter 15. Not quite remember which day I mentioned this. We are ranging, which means correcting over time. So this is exactly where we see that we see strength. Why? Because look at how bearish we were. So we were supposed to go low, right? We also have low strength of the bearishness. That's what we were able to hold. And then strength on the loose of the bearishness and increase of the bullishness. So when we were supposed to go lower, we stood our lines. We kept our line in here and basically defended that position, right? So as we're correcting, the time is ticking. And as you can see, the first thing that I was expecting was a pullback somewhere around here, or, and actually kind of like I played out button fantastically, breakout, retest, and off we go. Oh, by the way, look at that. We have a ATH USD. We'll see that maybe afterwards. Oh, you cannot see it. Man, I don't know why you cannot see it, but we'll maybe check that out afterwards. All right. So let's see. Basically, we are looking for our previous areas in here. Not only that, we're using one of our favorite paid indicators, which is the predictive ranges. Not only that, look at that. We have a line in here, and let me zoom out. This is a money flow POC. All right. And also a resistance. So what we have in here, money flow POC acting as a resistance, basically looking that we could be going high, maybe through the or to the golden lining here. All right. And then what, start looking for that maybe push out or push over, and then or blow off, and then reversing. But still, look at what's going on in here in this area. We have high volatility, right? So everybody got wrecked. Many of us got wrecked in here, and then basically continued to the upside. Just so you know, I did not take any other trade in here. Just the breakout, retest, and off we go. Right somewhere around here. All right. So in what we were talking about, well, then maybe this was a half of a position. I said maybe because for me it was a half of a position, but I don't know if you guys took a half, a third, a fourth. You know that you can play with the fractionary position that you have in there. So what's going on right now? It's time for me to clean this up. All right. Perfect. So what is it happening here? Are we bullish or are we bearish? Of course, are we bullish? All right. Let's check out our dashboard. This is the part of the paid indicator. We are completely bullish, right? Are we ranging? Of course, we're not ranging, right? And how is the strength going? The strength is going very, very nicely. So what are we expecting? We are maybe waiting for another big pullback somewhere around here, for a continuation to this line. So a micro trade could be possible from now on into the future. All right. So basically that wraps it up throughout what we were talking about. Also yesterday we did, I believe, a 5-minute TAO analysis, if I'm not mistaken. Yeah, it was 5 minutes. Perfect. We're looking at this area, basically looking for what? This is what I ended up the class yesterday, telling you guys. That's why we have indicators now, right? To extract information that otherwise we wouldn't have, or we didn't hit. Crypto Billy in the house. What is up, my friend? Welcome, welcome. And here, if you guys remember, I was telling you we are building up another ghost trend, right? And then based on that, maybe ghost trend, looking for a parabolic breakout on that area. What happens? It's not about the breakout, it's about your retest. Off we go until we have sweep of the lows, take of the highs, sweep of the lows, get back above the previous high. Perfect. It's not about the breakout, it's about your retest, your entry, and off we go. And then every retracement to the upside. At this point on the 5 minutes, we are trading to break the trend. Why? Look at where the parabolic movement is at, right? Look at where the parabola is ending. Look at where your tangent is going through, right? So basically, we're looking for maybe a double top, right? Or a lower high. Look at the color. We're turning bearish already, all right? We're going low, which means that if we go low on strength, all right? It's low strength of what? Of the bearishness. So instead of going down, maybe we could be having a formation, a bull flag, a symmetrical triangle. Remember when we talked about pattern morphology, we need to start looking for what is a pattern forming and what could this evolve so we can start taking those trades, all right? So what is happening here till now, we don't have a another pivot, right, that we can distinguish maybe a trend line. So it is a waiting time. What maybe if we just go lower, if we break out retest, we could be looking for the next entry right here at the dynamic reactor, or your first entry right there for a short to your dynamic reactor. If you don't have a dynamic reactor, remember that yesterday we talked about how to use the EMAs, right? One of those EMAs, remember, that was the simple moving average. One of those what is it? Strategies. Sorry about that. It was the crocodile, right? The alligator. So basically, what's going on with that crocodile? Remember the nose, the teeth, and the water. So what's going on? The crocodile now, it is below the water. So we're not into trading for bullishness. At this point, we're trading for bearishness, basically looking for shorts. But we're still above the dynamic reactor. We're still above our consolidation score. We are very high in consolidation. So what is it happening here? This is one of the ranging scenarios that we were talking about yesterday also, right? So how do we develop this? Remember, we look for maybe another set of EMAs. We could be looking for a bigger EMA. In this case, I'm going to be turning on my SMA combo. Just so you know, it's 110 SMA combined with a length, smoothing length onto, right? Everything is on the closing price of the candles, right? Based on the closing price of the candles. As you can see, now they're getting together. Most likely, the SMA combo is going to diverge from the dynamic reactor, and I could get an opportunity zone right there, all right? So that will be for TAO 5 minutes. Now, let's talk about EMAs, all right? At this point, let me remove the SMAs, right? Let's talk about EMAs. Let's do a little bit of a recap of SMAs, or by the way, any moving average, which is how they get their values. Remember, and let's just take, for example, my SMA combo, right? That is based on, at this point, on the close price of each candle for the numeric value, right? I can do the lower, which is the wick low point, high, basically the high end point, or many other things in here, right? We're not going to be covering all of those, especially since things can get very complicated. That will be for maybe in a very advanced class, right? And by the way, just so you know, I don't use it. Retro Mike Tech in the house. What is up, bro? Jesse Gluck. Oh, Jesse, my friend, you just missed out on a big topic, on a big secret. You want to know what is it? Go rewind at the beginning on the class. I promise you, you're not gonna regret it, bro. Go check it out. And by the way, keep it a secret, man. Keep it a secret. So at this point, we're using the SMA combo on the close price action, right? So basically, when each candle closes, that is the price action or the number that we're getting for doing the average, right? So that's where the average comes from. I'm not gonna be explaining you in detail because you can go and watch it, but I'm gonna be giving you sort of like how it works explanation. This is based on how I would understand it or how I would maybe explain it to myself, right? So don't hold me accountable for this exact explanation. Go and do your research because there is a formula, very set, a specific formula to how to calculate an EMA. What is an EMA? And E different from, oh, SMA, right? SMA. So this is an exponential moving average, whether the other ones are regular moving average. So which are, oh man, oh, they caught me off guard. So a regular moving average, right? So, oh man, it just went out of my head. Wait. I know. Simple moving average. That was the word. Sorry about that. It just slipped out of my head, right? Exponential versus simple moving average, which is just normal moving average. What is exponential? It has an exponential factor. What does exponential mean, right? If we draw, let's just make it simple, right? If we draw an X and Y area, right? Something that moves linear, move like that with no change, right? This would be basically an average of constant movement, constant growth, right? When something is exponential, it is moving either 45 or higher than 45, which exponentially doesn't match 1 to 1, right? It is 1 to maybe 3, right? So 2 to 6, and so on and so forth. So the growth becomes exponential. It's not 1 to 1 growth, right? How do we determine that? Well, again, I'm just going to explain to you how I would understand it, right? And I'm not going to get into the formula because the point in here is not to really dig into the formula, just to understand how they apply the exponential factor. So let's just say that 10 moving average, if you guys remember, we're catching 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 candles. Based on those closing price of those candles, we add them together, all right? And then we divide it by 10. That is going to give us a price. That price, we're going to be putting a little dot in there. When the next candle appears, we're removing the last candle and we are in the new candle. So we have again 10 candles. And then we're going to have another point, all right? That is the SMA. Well, when we're talking about EMAs, exponential, we're going to be giving it much more importance at the last candle, not the exactly last candle. Let's just say that we're going to be adding, out of these 10, we're going to be adding another 10 or another 9, all right? So how does that work? Let's just say that the last candle, instead of its closing price, right, we're going to be added another 9 plus, if that makes sense. So if the last candle closed at 451, we're going to be adding it, just for example, all right, we're going to be adding a 9 other numbers. So 559 at this point, since right now it's 150, right? So that gives it much more weight into what's going on at the last of this part. Then the 8 candle is going to have a number 8 added to it. 7, 6, 5, 4, 3, 2, 1, and 0, right? Which is going to be making your EMA much more reactive at the end, all right? So that's why it's exponential factor, because as we get closer to the end, we have a much more value, heavy value to those end candles. That usually lets you switch, intersect, or change above or below the price action faster, reflecting an early change of trend, all right? So why would you care about this? And you would care if you like EMAs, right, or SMAs. I usually used to use, there we go, this one here, 4 EMA, all right? The 4 EMAs that I used before was the, what was it? The 14, if I quite remember right. The 55, not the 50. Remember why? Because I just use and fine tune the EMA as I like it, as I like to see it playing out, right? Then the 100, right? And then the 200 EMA. And then I'm going to be changing the style. I like blue. The next one is going to be, because for me it's the most important, it's going to be orange, but this orange, making it thicker, because for me that is the trend or the inner trend. Remember, we have macro trend and then we have inner trend between the macro trend, right? So the 55 for me is the inner trend reaction in the 4 hours or in the 5 minutes. It doesn't really matter. And I'm going to be giving it a lot of weight, right? The next one is going to be somewhere either, I don't know, red, but I don't give it a bright red. So I give it a, I don't know, this kind of red, and then make it just a little bit thicker, and then give it all opacity, right? And finally, the 200, I make it white. I keep it as is, but also give it a little bit of more opacity, right? And basically, what I'm looking for in here is the 14 here, it is my price action. All right. So basically, I want this to be sticked to the price and be calling out most of the volumetric place of the volumetric part of the candle. What is the volumetric part of the candle? Just the body. Right. Simple. I want to be tracking the body of that candle. Right. When I have a big body candle going through and getting out, that's when I start looking for major entries. Right. So I'm looking to go to the 55, and then I could be looking into long position, right? And then give myself a wiggle room. Usually I do my stop loss at the red and then give it that wiggle room. In this case, it liquidated me or stop me out. And then if I start my last point of entry, it's going to be right here. So what I usually do when it stopped me out, I reopen, I have a position at the white, kind of slightly above. And then give myself, I look at where my important parts by using my support and resistances, right? And then looking where I could be maybe placing my stop loss, maybe right here, all right? Then let me see if I have something else, because I should be a little bit fairly behind. Not much, but whatever. I'm looking at this high, this high, this high, so somewhere in between, right? That's where I set my stop loss and a little bit of that threshold, right? So basically I have a tree system. The first one is going to be my measured entries. The second one usually looks for my stop loss regulation, right? But I also need to see that it pairs with support and resistances, and then add my wiggle room. And finally, my last stand possible re-entry, right? If I lose the 200 on usually the 4 hours, and you'll see how it changes between the 5 minutes and the 4 hours, because it's a dramatic change, just so you know, right? I'm going to be looking for change of trend. Another thing that I usually look for, it is look at how separated they are. This is not good. Let me show you before. When we are the most separated, keep them separated, what happens? A sharp turn, right? So what happens when we're going up? Let me see if I can catch something. There we go. We're going up, and where they're most separated. Oh, yes, it's true that we have a blow off top, but then we ended up going downwards. You see this? So when they're spread out, this is what I start being very, very cautious. All right? Very, very cautious. So what am I looking here? How do I maybe catch a short in here? Well, then I need a topping indicator. In this case, let's go, remember, zoom out, right? Zoom out. And then what is a topping indicator? Candlesticks could be it. Could be one of those. What could be a candlestick pattern or candlestick structure that I could be looking for? Lower high. And then lower low. What is my low? Maybe at my 55 EMA. When am I going to be maybe putting up my stop loss? In here? So I'm going to be trying to short from here to here, reversal from here to here in the best case scenario with a stop loss where my next one is going to be. So maybe here, and then give myself a wiggle room. Also remember that I'm using support and resistances. Look at that. This is slightly below. So let's go for that one, right? And then aim to previous highs. Well, maybe this high, this bulk of the highs, right? And that will be my next entry. Remember, let's add also our brain. We are very separated. we are kind of like a topping out. If we're having a lower high, that usually means that one of two things. We are changing the trend because we haven't actually drawn a trend line just now. That's one important part that we need to remember, right? And then, Jesse Gluck, Piper, this is way too funny. I used to not notice that, but I don't wire stuff down in my head like journaling. You know, what should port start? I see. Thank you, my friend. Awesome. Frank the Tank, what's up, bro? All right, let's get going. Guys, you're so much fun. I love you guys. For real. Seth, what's up? Welcome. Am I missing? Hey, Jay Violet, I was missing you. Welcome. Welcome. Harp, what's up, bro? Welcome. I shout you out at the beginning of the class, just so you know, my friend. I shout you out, Harp. So give it a look when we're over. All right, let's continue. So, what happens here? Well, let's get it started from the beginning, right? Let's once again turn on everything because remember, we're looking for the indicators to give us the heads up, all right? So, what do? We create a trend line. This is an immediate trend line. Remember when we did this last time? Let me remind you. Oh, no. Let me save it first. And let me remind you. Where was it? Here it is. When we did this last time. And that was... it was in here. It was in here. It was basically this week, remember? This one. Not only that one, last week, and I know this is getting too messy, we had a trend line here. Right? Look at that. Isn't it looking like what's happening right now, or what we estimate that could happen? High, lower, low, arguably, right? Lower, high, breaking trend line. It's not about the breakout, it's about your retest. Off you go. Beautiful entry. You see that? So just so we keep an eye on what's going on here. Yeah, up it anyway. And then, what do we have in here? The same trend line. All right? So what could be happening here? We could be having a lower high. Next thing we're going to be looking for is losing of that trend line. Off we go. Now as we start looking, all right, where do we have some support? We have supporting here. We have next supporting here, all right? So maybe this would be it, right? Loud order block? Bearish order block. Does that tell you something? How does that smell like? I can see it. It smells like a top. It smells like a top, right? Loss and Crypto, what's up, bro? Welcome. Right, so what else could happen here? We have a golden line. And we have a lot of high order blocks in here. So I believe that we could do something like that, and maybe this is a speculation, all right? But that depends on what's going on. I believe that we're still bullish, all right? I believe that we're still bullish. I think we still need to see maybe a retracement. It wouldn't be that bad to going all the way here, and then, you know, maybe take previous highs and then have the sharp breakout, right? So, but still, we're on to that. So now let's bring out our EMAs. So now that we have that, look at where is our support. Where is it going to be, right? So I could maybe get stopped out. That's why I always add my long position, then I adjust, and then based on here, maybe I add a little bit more. All right, perfect. That's it, easy peasy. Or I can maybe go in here and do 1/2 of an entry, and why not? We have dynamic reactor. If you don't have dynamic reactor, you have a SMA combo. So on your SMA combo, another half, then you compensate to where? Right here. So if you, for any some reason, getting here, that's going to be a much better entry. All right. So there is a couple of things that I want to talk about with you guys in here just to wrap things up. EMAs are a little bit more reactive. They're exponential. They tend to be more reactive. Let's go to the 4 hours. The 55 EMA is the one that I use as my favorite for inner structure. Look at that. is not as precise as our SMA combo, right? It's not as precise as our dynamic reactor. And another advice, if you just see too many supports and they're not acting to give you a better perspective, hey, you know what to do. Turn them off, right? The point in the indicators is that they help you understand what's going on in the markets, all right? Not that they act as a FOMO indicator for you, right? So, hey, this could be it. No, this could be it. No, when you start doing that, you know, like cut it off, go back to basics, right? And then use what it makes sense. Another important thing is when we have all of them together for the switch and the price goes above, we're looking for breakout retest. Everything gets together to give you a better, good perspective. So right here, what's going on? Maybe we could be having, not just yet, but they're getting together for breakout retest. Off we go. All right. So maybe also, maybe in the 4 hours, we could be having a lower high. Who knows? 4 hours TAO. All right. Different than Bitcoin. Another thing that we need to understand is that Bitcoin will dominate this. Also, TAO, we talked about pattern morphology. Remember? And what just happened? We have a breakout. I would say that we are a little bit too late for the breakout. I would call this the breakout. But if we were not, we could be maybe looking for a flag, a retracement, for a further continuation for double top. And we haven't even looked at our oscillator. All right, let's bring up our oscillator here. Oh, this is interesting. Let's not ignore this. We are getting close to reversal zones. Not quite there yet, right? Let's even do a horizontal. Somewhere. And as you can see, I'm trying to grab as many as tops as I can to average them into an area. There we go. I think that fits very close, spot on, very close, spot on, very close, spot on, spot on, spot on, right? So I would be looking for maybe that price action, sorry, that RSI prime gets in there. By the way, guys, remember this RSI prime, another free indicator from Chart Prime, so do not hesitate on using it. All right, so let's go maybe to our linear regression. What are we just having? This is interesting. We are below the zero line on our strength, right? That's the only thing that I don't like. But still pointing up, so slight force strength on a bullish scenario. Again, we are below the ADX zero line. That is not meaningful, but still adds to the movement. All right. So far, breakout retest, so not quite a higher high, right? But then a possible reentry for a continuation. We just need to make sure that we don't lose the 55 in here, which is going to be in line with your dynamic reactor. Because if we lose that, we're confirming not a breakout retest, but we're confirming a lower high. And then we're doing a what? A lower low. So your next entry will be here for your long and then here for your short. You see that? All right, perfect. Guys, I would say that this is going to be it for today's class. This was fairly simple, just an exercise on how to start using the EMAs and SMAs, right? And that is basically it, guys. So thank you so much for joining. And of course, as always, see you guys tomorrow.